The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the April 2nd, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is tossing at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off to Steve at TFNN.com. Inside the subject heading, please put radio show question. Now, of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we got most U.S. indices are trading to the upside. Dow's up 82, S&P 8, NASDAQ 17, Russell's up 10, transports are up 72, semis are down 7. The only U.S. indice really trading to the downside. The XAU is trading up just a bit out there. Let's do this. What do we want to do first? Let's go take a look at the advanced decline oscillator, see where we're trading there. We'll go ahead and close this down here momentarily. That's the left-hand panel. It is trying to. It's trying to breach the zero threshold level. It's at point. It is above it. It's 0.8, 0.6. If it does close above the zero threshold level today, that means. That's all that's doing, folks, is taking the advanced decline line and it's looking at the difference, which is what an oscillator does, looking at the difference between the 39 and 19 period exponential moving average. Price here in the New York Stock Exchange is also right now trading above its red oscillator and change line. That's at 19,404. That would also be a positive to close above. Now, what's really needed here in order for the markets to really start to get their mojo to the upside is going to be for that spot VIX index to close below its 50-day exponential moving average. We're quite a ways away from it. It being 1968, we're trading right now at 2183. So we've got one indicator that is shifting its thoughts towards the buyers, and the other indicator not participating. We need both those things to give us that signal out there. Steve is going to go ahead and close this down, and then we're going to go take a look at. Let's go take a look at the equity futures out here. So we'll pull those charts up on our screen now. Do you know that each of the daily equity future contracts have bottom patterns? Well, let's go take a look at them. Let's go take a look at the ES Mini. You know, after tons of study, yeah, there's an A to B equals CD pattern that we can use. There was enough of a retracement out there. So let's go ahead and draw this in. Here's our A point. We get down to this low, bar number A. Nope, that wasn't it. It was going to be, or was it? Shoot, how did I do that? Gosh, it's so hard to. The only thing I could come up with was really the low here. I hate doing that. The low here from February the 28th, because we did get a higher high that very next trading session. So this should be more than a 1-to-1 A to B equals CD, which was confirmed with that bull sash candle back here on March the 14th. And now what we're doing is we're trading with inside its bull structured profile out here. When price remains above the center of its bull structured profile, 56.32, and especially if it's above its oscillator and change line, odds favor move to the 57.41 level out there. The NQ That's easy. That's got that Rhodes momentum indicator bottom, and price is now back inside its profile. I think I did mention there is a new profile that is attempting to form above price. That's typically a bearish message out there. The issue is that we won't get a confirmation on that profile until this evening at 6 o'clock. So I don't know whether it's going to hold or not. But right now, what I can share with you is the resistance level would be the bottom of that new profile, and that's at the 19,912 level out there. We take a look at the Dow Equity Future Contract. It has a TD9 count top, a TD9 count bottom. The TD9 count top took price back to its breakout level. That completed its move to the downside. Now we have the Dow Equity Future Contract trading above the top of its daily profile. Now it's just a smidgen above it, it being 42,296. We're at 42,343. A close above that level today suggests that we make a run for its TD9 count top from about a week ago. If we look at the Russell 2000, it also has a buy the D point bottom. That one's much clearer to identify. If we take a look at it, let's open up the charts here, and you'll see this pattern. So nice large A to B equals CD pattern. It gets completed on March the 14th with that bull sash candle out there. And any bullish candle that would form from this point forward would generate a Rhodes momentum indicator bottom. Now, the Russell 2000, much like the NQ, has also got a new profile forming above price. Again, we won't have knowledge of that confirmation of that until this evening. But right now, the next level of resistance for the Russell 2000 on a further rally, haven't even gotten above yesterday's high, would be 2071.30. So all four of the daily equity future contracts actually have bottom patterns out there. And look, we can go further than that. The Dow Jones Industrial, the cash indices, got a T9 count bottom. The Russell 2000 cash indice, a buy the D point bottom. The same thing with the semiconductor index. In fact, let's take a look at the semiconductor index. I know that was a request from Duncan inside the Tiger's Den, but we might as well go take a look at it right now. And when I say it formed in a buy the D point pattern, I'm referring to the daily time frame. Yesterday, what the SOX, what the SMH did, what the index did. Now, there's a couple different A to B equals CD patterns. So this is the larger one that is out there. With inside this pattern, there's a smaller pattern inside the SOX for its daily time frame. That pattern would look like this. The A point would be out here on the high from January 22nd. Your B point is a low on the 28th. And if we just simply move that over to the next higher high that takes place, you can see we are at about a 1 to 2 A to B equals CD pattern to the downside. And yesterday we had that bullish hammer candle. So for the SOX, for its daily time frame, it has a bottom pattern. That bottom pattern would be negated with a close below yesterday's low, which is 183.80 out there. So the daily time frame for the SOX does have a bottom. If we look at the weekly time frame chart, it's going to go ahead and complete a TD9 count bottom on Friday. So the weekly's got a bottom. And then we take a look at the monthly time frame chart, which has a TD9 count and Rhodes momentum indicator top. It is simply consolidated with inside its profile. It has tested and has held the 184.09 level. That's the bottom of its monthly profile. So the semiconductor index should rally from here, Steve-O, and the rally should at least take us towards the 191.21 level. If price can clear 191.21, we're likely looking at a move to the 199.56 area. That is the bottom of its weekly profile. Above that, we're looking at the weekly oscillator and change line at about 206. Now, this formed a daily bottom. When we get a daily bottom, we typically see intraday signals out here. The 65-minute time frame chart did in fact form a TD9 count bottom pattern. What it needs to do, though, is it needs to go ahead and clear some resistance. When we get back from this break, I'll share with you where that resistance level is. Then we'll start taking a look at some of the other requests as well. Steve Rhodes with TFNN.com.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back up, folks. Let's get back to those SMHs. Let me give you the number that price needs to clear. I accidentally clicked on the wrong button, and so now I'm just waiting for this to just kind of fill itself out here. There's some stuff going on in the background that you don't see, but now we should get back here to the SMH, and we're really just looking at the 65-minute time frame chart. The 30-minute has a TD9 count top, and the 60-minute price has profile resistance at 189.94. That's the number. If you see it close above 189.94, that's going to add to the idea that the semis have bottomed out there. Of course, it closed below yesterday's low. We'll negate that by the D-point bottom pattern, so you'll be watching for that as well. So 189.94 is that number. Steve-O, inside the SOX index out there, which did form a by the D-point bottom pattern yesterday for its daily time frame, TD9 count completing as we come into the weekend. Lee M. wrote in and wants to take a look at WOLF. Wolf is one of the ticker symbols that he trades out there. And Wolf did, in fact, complete a monthly TD9 count bottom. It did that in March. Now, you're watching that low because the price would have closed below 241. That pattern gets negated, and that says that we head lower. What this doesn't have is a weekly bottom signal. And it doesn't really have much in the way of a daily bottom pattern out there, although I do see a wave number 7 signal out there. I still believe that in the case of Wolf, you need to see price close above its oscillator and change line for its weekly, monthly time frame, or at least start trading above it in order to even consider taking a long position in it. That's oscillator and change line has acted as resistance ever since October of 2022. So it's proven itself, and you want to see price move above that, close above that for sure, in order to suggest that this thing wants to move higher. You also had a request to take a look at the trade desk. Let's pull up the trade desk charts. TTD is that ticker symbol. And now this has a Rhodes Momentum Indicator. I take that back. The trade desk. What do we have out here? We've got nothing but price trading with inside its daily profile at this moment in time. And you're looking to They're looking for an entry position or to add some shares, I believe. It's trading between 53.86 and 62.50 without a bottom pattern. A bullish reversal candle would confirm a Rhodes Momentum Indicator bottom for its daily time frame. The weekly time frame chart needs more work to the downside. You're in bar number 7 this week. We're below support levels out here. In fact, there was a new profile that formed last week. 60.63 was the bottom of that profile. Let me just confirm that. Let me double make sure. 60.63. We're trading below that, so that suggests lower price. We're trading below everything on the monthly time frame, so that too. So the trade desk, even though the daily could, if you got a bullish reversal candle, could give you a Rhodes Momentum Indicator bottom, I don't know if we're going to see price clear 62.50. That's the top of its daily profile out there. SAT-P wanted to take a look at a couple different instruments. GLOB is the first one. Would like to add a few shares, then SAT, today's the day. You've got a daily TD9 count bottom. A bullish reversal candle will give you a daily Rhodes Momentum Indicator bottom. Now, what that suggests is that price should rally up towards 132.93. That's where price broke down from. So you're getting the signal on the daily time frame to buy a few shares. You're not getting that signal on the weekly time frame. And that's a bummer out there. And you're not getting that signal on the monthly time frame chart either. So this is potentially only getting ready for about a 2-bar rally, a 2-day rally. Today being bar number 1 of that rally, but it does have that bottom pattern. So this could turn out to be more than a 2-day rally. Maybe it's only a 2 to 4 day rally without any bottom signals on the monthly and the weekly. It just says be careful out there with regard to GLOB. You also wanted to take a look at Snowflake. SNOW is a ticker symbol. So let's pull its charts up on our screen out here. And a Snowflake, so yesterday, Snowflake formed a buy the D point bottom pattern for its daily time frame. Let's draw on the A to B line out here. So here's A to B, and I'm going to go ahead and copy and paste so that we can leave that one in there. I'm going to try to copy and paste. There's our copy, there's our paste. Now let's go assemble. Now we assemble this, we put this at the highest high after the B point forms. You see we're probably at about a 1 to 1.618, 1 to 1.272, A to B equals CD pattern, and we had a nice little hammer candle that formed yesterday. Now, that says that if price were to close below 144.76, it would negate that signal. But you do have a buy the D point bottom, price getting back inside its profile. The key level of resistance for Snowflake is probably going to be about the 152.99 level. That's the center of its daily profile. If, in fact, price can get above that level, then we're looking at a move towards the 159.98 area. In the case of the weekly time frame chart, we don't have any kind of a bottom signal whatsoever. And on the monthly time frame chart, we have price that is trading above the top of its monthly profile. And the top of the monthly profile is at the price point of 150.07. So that's a short-term positive. So what does that say? What that suggests is that we should at least rally. This should be day number 2 of a rally. So maybe you get a 3 to 4 day rally out here. Maybe you only get 2, I don't know. But this should really target that 152.99 area. So that's what I see there. The daily is giving you a signal to add a few shares if you would like. The weekly and the monthly is saying, I'm not really sure what you're talking about, Steve-O. But of course, it may be getting its P's and Q's from the daily at this moment in time. You also wanted to look at Riot. Riot is going to, or yesterday formed a Rhodes Momentum Indicator bottom pattern. It also formed a new profile yesterday with support at 707 and a sell zone between 824 and 883. So you've got your bottom pattern on the daily time frame, and you have your bottom pattern on the weekly time frame, which will complete a TD9 count bottom pattern this week at breakout support at 698. The monthly has just simply been a sideways move between 608 and 1020 out there. So this one, Riot, you definitely have the signals to add some shares, because you got a nice clear daily and weekly bottom. Of course, they can always fail out there, but you got the signals that you were looking from Riot. So hope that helped you out. SAT-P, as always, thanks so much for your request. Hector and Patty want to take a look at Wix. So let's go take a WIX is the ticker symbol. The question is, will this get to 200 buckaroonies? Well, yesterday was a good start. The reason why it was a good start was because it formed a Rhodes Momentum Indicator bottom. It had a nice little bullish hammer candle. So to the downside, the level that you're watching is 159.25. It closed below that, and you would not want to be long this position from the daily standpoint. Now, what price should do, you're looking for this to get to $200. The first level of resistance on the daily time frame is 172.83. So you're going to need to see a close above 172.83, and obviously in order to get to 200. Let's say you get that. Well, on a daily time frame, unless a new profile forms, Hector and Patty, you have a sell zone between 189 and 195. We're leaving the cents off there. Now, the weekly chart is in bar number 8 of a TD9 count. So it's likely to go ahead and form a TD9 count between this week and the next two. It's really next week that you're most interested in that in order for the weekly TD9 count bottom pattern to form, price must close below, at next Friday, must close below 172.59. Did I get that right? Close 172.59. Yeah. So you're not looking for a ton of rally out here if you're looking to go long whips, because you'd love to see. Well, if that weekly chart if it closes above that level, the pattern goes away. Now look, on a monthly time frame, price is in its buy zone, Hector and Patty. That's between 148.86 and 159.77. That was Wix. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So, I've received a number of questions and all basically the same general discussion topic, which is, Steve, you don't say anything about tariffs. Today's National Tariff Day. Here's the reason why I haven't really been discussing tariffs or what have you. Okay, so let's say we increase the tariffs in Europe as an example. And right now the dollar is weakening today. I've got some currency pairs up on my screen. But what's the larger picture? Larger picture for the dollar is going to continue to move higher. We formed that nice weekly TD9 count bottom pattern. It completed that pattern last week out there. So let's just say, tariffs, it costs a little bit more to bring in something from Europe or from China, but the U.S. dollar index gets stronger. How are you going to account for that, right? We've, in a currency market like we have out there, nobody's really even talking about currencies out there and the impact that has. I mean, that itself can be a tax, right? So U.S. dollar is going to be stronger for the next several years out there, and maybe that's really what the market has figured out and knows as well. That it's pulling back a little bit, but it's just consolidating. Quite frankly, I don't have the U.S. dollar index on my screen out there, just consolidating with inside its daily profile. But more likely than not, the euro is going to continue its move to the downside out there. The dollar is going to get stronger against most of the currencies out there. And so how's that really going to really crush the U.S. market out there? Well, how can crush U.S. market is we don't buy as much product overseas, right? That can start all kinds of recessions and issues around the globe out there. But hey, if price goes up, and the U.S. dollar gets stronger and it doesn't really cost that much more to bring things in, it'll be kind of muted. Like I said, we have bottom patterns in the Dow Jones for the daily time frame. The Dow, the Russell, the semis, the transports, the New York Stock Exchange, each of the 4 equity future contracts, the diamonds, the IWM. Where there's not a lot of bottom patterns at this moment in time is really within the sectors of the S&P 500. And just the XLY and the XLU, as best I recollect, have bottoming patterns out there, but not like the XLK, the XLF, the XLV. We'd like to see that out there. But the reason I don't really talk about tariffs is if you're going to talk about tariffs, then we absolutely have to talk about our currencies, the currency system out there, and what does that really impact. And you don't hear anybody talking about that on the boob tube out there. Why? Because they don't really necessarily understand it for the most part out there. So, we're going to just wait back. We're not going to play in the sideshow. I consider the tariffs and everything else there that they're talking about. It's nothing more than a sideshow. The real show is what are the stock market charts communicating to us? As an example, like today, and John in the Tigers Den brought this up when the NQ was pulling back this morning. It was pulling back to a couple of things, but one of the areas where it pulled back to. Where to put it right here. It pulled back to its perigee pivot point that came in on Sunday out there. We had a question over the weekend. When you have a perigee is when the moon is closest to Earth during the current lunar cycle. That took place on Sunday early morning out there. And the question was when you have a perigee or apogee pivot point that comes in, those are represented, by the way, by these blue horizontal lines on my chart out here. That's the easiest way for me to do that inside of e-signal. Price pulled right back. So I identify the close of Friday and the open of Sunday. And that's what I do out there. If you take a look at the NQ, that's chart number 2 here in the center. Price pulled right back to that perigee pivot point and moved off of that. Now, there was also a 60-minute TD9 count bottom pattern that had formed there. You can see in the case of silver, where silver's real struggle is about the 34.83 level out there. Price has gotten up to that perigee pivot point, knocked it back down out here. So in any event, if you're going to really talk, you're going to have any kind of discussion about tariffs out there, you better be having discussions about currencies. And I better be able to try to figure out what the currencies are going to do as well. Anyways, Dreaminar for other chat rooms. In any event, out here, let's take a look at the next request. Is coming in from Brent in Martinez, California, and Brent wants to take a look at Micron, MU. So when I take a look at Micron, Brent, bar number 9 of a TD9 count is going to go ahead and form today. The problem is I don't consider it to be a valid TD9 count. And the reason is for the daily time frame, it is bar number 7 that is the low of that pattern. Now, today is bar number 9. If price were to spike below, whether that's today or tomorrow, in the case of Micron, we need a spike below 84.10 for its daily time frame, has to occur tomorrow. Then what we would do is we would see a TD9 count bottom pattern for its daily time frame. Right now what we have, and it still may have bottomed, it's just not with a TD9 count. When I say it may have bottomed, what I'm really referring to is I'm looking at its swing point. Let me just open up the chart, make sure I'm grabbing the accurate and correct swing point out here, because I believe this came in with quite a bit lighter volume into its swing area. But let me pull this back a tad. So it never got down and tested the low. What I'm referring to is December 20th, and there was 49 million shares that traded hands that day. 2 days ago, we did 21 million shares. Now, this did test the Rhodes Momentum Indicator bottom signal, another swing point. Did it do it? No, it didn't even get all the way down there. This was the day of September 12th, 2024, 30 million shares. Yeah, 30 million shares on that day. And again, we were down with 21 million shares. So just simply from a swing point standpoint, you're in essence rejecting it with lighter volume. What it hasn't done yet, Brent, is really price needs to close above the high of December 20th to reject that swing point. So it's still trading inside there, and it needs to close above 90.25. Now, if it can do that, then Micron here, it's really interesting because I've seen that. I don't recall seeing this 3 times in a row, kind of like that. What I mean by that is the daily profile. It's kind of hard to see, but if you look at the digits on the right-hand side, there's the ones that are in black are telling you where the profile levels are, other than the one at price, which is telling you where price is trading right now. So they're forming above price. Again, these profiles may not take hold or at day's end, but so you've got resistance at 91.74 to 92.74. So that's a daily time frame. Let's go see what we've got for MU on its weekly and its monthly time frame out there. And on a weekly basis, you just see this little sideways consolidation that it's in, and price is holding the bottom of its profile. And then finally on the monthly time frame, the monthly time frame needs a spike below December 2024. That would be a spike below 83.54, and it's got to do it this month in order to form a monthly TD9 count bottom pattern out there. So I don't really have the bottom in, so to speak, other than just a swing point test, Brent. That's all that I see out there. If I'm overlooking something, please let me know, and I'll be happy to pull those charts back up and re-review them. In the meantime, let's go take a look at ticker symbol HOTH. HOTH, this is for Dan inside the Tiger's Den. And this is about a penny stock. It's trading at 98 cents right now. It is struggling at its daily oscillator and change line, Dan. So if price can close above that, it's been ticking up towards that level here for a while. So the first thing it needs to do in order to get any kind of mojo is close above $1.01. 101, 102, somewhere right around there. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're back at the stock charts here. HOTH is the ticker symbol. So what information can I share with Dan about this? Well, one, we took a look at the oscillator and change line for the daily time frame, and that has been acting as a resistance point. So Dan knows once price closes above that level, we're likely to head higher. Now, where we're going to head higher to is also where we found resistance previously, which is at $1.26. And $1.26 happens to be the top of its daily profile, as well as its TD9 count breakdown resistance area out there. So clearing $1.26, and let's call it $1.27 since the weekly chart has a TD9 count breakdown level at 127. That's really what you're looking for with regard to the upside. To the downside, I'd be watching 88 cents. It's trading inside its buy zone. That's between 88 and 98 out there. If you're to close below 88 cents, that would be a signal that we're likely to head lower out there. So, Dan, I hope that helped you out with regard to HOTH out there. Best of luck to you on that. Let's take pre-market high was $1.27. Wow. What a wild stock this is. I mean, this is at some point in time what Tom would tell you. So in honor of time, I will tell you. If you take a look at the daily time frame out here on the day of January 7th, no idea what it cured, tried to cure, but 417 million shares, okay? That's a high volume high. It does around 150,000 shares. And so that's why you're building a position, because of that high volume high. So that should be tested. You know, I have seen, so I just wanted to share this with you too, because it's not like that rule works all the time. I have seen, and I wish I could remember the specific stock right now. I have seen a number of high volume highs, and price never gets back up there. So, you know, you got to have some fundamentals about the company too. But it does have that nice high volume high, and you know, and I would say the odds favor, until we see how this thing trades, at some point in time, price should make its way up there. There being about the $3.80 type mark. But I don't know. Is this a reverse IPO or something here, Dan? Because when I take a look at the monthly chart out here, you know, this says that this traded for $340, and we're at 90 cents right now, 99 cents. So I'm thinking this is a reverse merger or something along those lines, or a shell corporation, whatever they did out there, because it just is. Maybe it is. But look, I'm just staying focused on the daily time frame, you know, what's going on there in the weekly, so that you can, so hopefully you can assist you with your trade. So that's the best I can do out there. Yeah, reverse split many times long, huh? Let's take a look at SMCI. It's been a while since we've taken a look at this. This is for Joe who's looking for an entry point. And so when we look at SMCI, wow, this is as wild a profile day as I have ever seen. SMCI, for its daily time frame, has just formed a new profile above price. Again, that is a bearish message. Doesn't mean price can't rally up there, but do we see this? Did we see this in the Qs too? Let's take a quick peek out there. But I've now seen this at least 4 or 5 times. I've never seen that in one single day, not even a month, quite frankly, for the most part. I'm not sure what it's telling us. Well, what is it telling us, Steve? It's telling us about overhead supply. So when you have a profile that forms above the prior profile and above price out there, it's telling you about overhead supply out there. So that says the resistance level, should this profile form, more likely to, when I look at a stock versus a future contract or something, is between 38.89 and 40.02. Now, what I don't have out here is a bottom pattern for its daily time frame. I don't have a bottom pattern for its weekly time frame. I don't have a bottom pattern that I can't. I take that back. We do have a bottom pattern for the monthly time frame. It was a buy the D point pattern that formed in February. Yeah, so it does have the A to B equal. So in that case then, because if I've got that large A to B equals CD on the monthly base, I still have that same A to B on the daily and the weekly. And the weekly formed a bull sash candle back on November 22nd. So this does have a bottom pattern out there. What it doesn't have is for the daily time frame. The daily time frame negated that signal back when price closed below the low from March the 7th out there. That was a bullish engulfing candle. That's what would have confirmed that by the D point. That was at 35.36 out there. So another bullish reversal candle, though, for its daily time frame would, in fact, do that. So where are we going to leave this on SMCI? Quite frankly, it's all about the daily time frame right now. And the daily time frame, may rally up towards that 37.49, 38.89, 40.02 level, but really keep an eye on that out there. So that's the best I've got for you there. Hope that helps you out, Joe. S&P inside the Tiger's Den would like to take a look at Palantir out there. PLTR is the ticker symbol if you're following along at home. And Palantir out here is doing what? It is trading first with inside its daily profile. It's a bullish structured profile. The buy zone exists between 77.75 and 82.53. We're trading above the center of the profile. That suggests that we should rally up towards resistance. Turns out resistance is going to be between 88.10 and 88.89. The latter being the top of the profile, the former being its oscillator and change line for its weekly time frame. If price were able to take out, it's got its 89 count top, which took price right back to its breakout level at 81.80. So its work to the downside should be done for its daily time frame. How about for the weekly time frame? Well, the weekly time frame had a Rhodes momentum indicator top, and price pulled back to its buy zone. The buy zone is between $69.60 and $82. With the daily having a bottom pattern now that has formed, getting back to its breakout level of support, odds favor that this was also a potential buy on the weekly time frame. And then finally, when we look at the monthly chart out there, the monthly chart does have a sell the D point top. It was formed with that bearish shooting star candle out there, but price remains above its green oscillator and change line, and price remains above its profile levels. So therefore, it's in a breakout mode. So you're likely to get a rally. You got to watch these battleground levels. So let's call it 88.89 is 1, 96.27-ish. I think it more would be like 96.50 or so if we were to get a further rally inside of Palantir. So I hope that helps you out. S&P also wanted to look at Tesla out there. TSLA is the ticker symbol. Tesla here, when we look at the weekly time frame, completed a TD9 count bottom pattern last week. And now, last week also, formed a new profile. And now for the weekly time frame, prices trading above resistance, 270.11. It doesn't matter really where it's trading on Wednesday at 11:49. It matters where it closes on Friday at 4 p.m. But if at Friday at 4 p.m., price closed above 270.11, that's telling us that, one, you've got a nice solid bottom. 2, you're going to have a profile change in trend. And 3, that price should rally up towards its oscillator and change line, which is at 326.40. On a monthly time frame chart, price pulled back into its buy zone between 212.65 and 243.31. So no reason for it to not to continue to move higher. It did form a sell the D point top. It did that a couple months ago when it formed that bearish separation candle. That was the month of February. So may have a bottom on the monthly, do have a bottom on the weekly, and on the daily time frame chart, what do we have out here? I believe we have a bottom pattern as well. Again, with price trading above profile. So price is trading into a swing point right now. That's a swing point out here from March 27. That swing has 162 million shares. So far today, we are up with 94 million shares, a little over 2 hours trading. So you've got volume as you're pushing into this swing point out there. Tesla looks to me like it may be wanting to set up an A to B equals CD pattern to the upside, with the C point being the low from 2 days ago. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're taking a look at the XLF out here. This is for ELO inside the Tiger's Den. The XLF trading out right now at $49.84. What the XLF is doing here, ELO, is number one, it's trading above the top of its daily profile. That's a bullish signal. It's trading above its red oscillator and change line. Not as bullish as a green signal out there, but still bullish nonetheless, and suggests that it should rally further. Now, its price target happens to be its TD9 count top. That's a swing point that formed in March 26. Now, the low of that swing is 50.09. The high so far today is 50.07. The volume today is about 14 million shares. That swing point has volume of 39 million shares. So we're moving to that swing point with some nice volume out there. Don't know if it's going to be more or less. If it's more and we're pushing into it, price should go test that swing point high. The high of that swing point is at the 50.91 level, and if price takes that out, you will get a daily A to B equals CD pattern to the upside. On the weekly time frame, negated a TD9 count top out there. It doesn't have any other top as we speak right now. Let me just pull this back a little bit further. Yeah, it doesn't have. I could probably go back. I have to go back into the 2007 to 20 time frame. Maybe I could find a sell the D point, but for the most part, it doesn't have that top. I guess I found it here on the monthly. So on the monthly time frame, now it still doesn't have that top out there. So you just have price dealing with profile, support, or resistance. Now, in the case of the weekly time frame chart, price is traded below the bottom of its bullish structured weekly profile. And we can see that last week, the rally stopped where a counter trend move would stop. And that's at 50.69. That's the center of that area out there. So it looks to me like the XL wants to continue to rally. 50.69 is going to be your real key level of resistance that price would need to clear to tell you that we're getting up towards the all clear to continue to move higher inside of the financial sector. Folks, thanks so much for joining me on Wonderful Wednesday. Stay tuned for all the great programming. I'll look forward to seeing you tomorrow on Terrific Thursday. Take care. Be safe out there.